physical gold is not fast enough. How fast is it? If I wanted to move $100 million of gold, as we talked about, it's going to cost me $250,000. So it's impedance. But how long is it going to take you? A week? A month? Somewhere between, you want to move 3,000 pounds of gold from New York to, I bet a month, I'm guessing, if you want to get all the protocols set up. So you're talking about $250,000 in a month to move the gold. If, assuming I needed another custodian and I used Bitcoin and I wanted to move $100 million of Bitcoin, and this is where, Bitcoin critics are just utterly wrong and missing the point. They all think, oh, well, it takes 30 minutes and $5 to move Bitcoin. And they're comparing it to a new crypto network that has no value on it. And they're saying, right, I could find a way to move it in 5 minutes for a nickel. But that's not the point. The appropriate comparison is to gold. How long would it take to move $100 million of gold? And because there's $250 trillion in assets in the alt assets, and there's only $25 billion of real asset in the alt coins or the alt cryptos. So how long does it take me to move the $250 trillion around? And when you think about that, you realize that Bitcoin would move it in 30 minutes instead of 30 days. Mm-hmm. Okay, that's 1,440 times as fast, right? 1,000 times as fast a minute versus 1,440 minutes in a day. And so it's 1,000 times as fast, but then it's $5 versus $250,000.
Right.
I know. So we do that. That's 50,000 times cheaper.
Absolutely.
So now we've got people saying, oh, well, it's very energy inefficient, blah, blah, blah. Well, it's not really. It's inefficient in the way that it's inefficient to create an electro high-speed transit system, a mass transit system. It was expensive to build the mass transit system. It got really, really cheap to move on the rails.
Right.
If you look at the history of railroads, right, the biggest thing in the 19th century was railroads. It was pretty expensive to create the railroads. It became really cheap to move on the rails.
Right.
So what we do is we've created crypto rails in order to make it 50,000 times cheaper to move. But it's not just that it's 50,000 times cheaper. It's that it's 1,000 times faster and 50,000 times cheaper. And then when you start to multiply 1,000 times 50,000, and you realize it starts to be 50 million times faster. Right. And then you start to add that third dimension, which is maybe a computer that thinks about this while you're sleeping 18,000 times. And you realize eventually you get to 50 billion times faster. And now we've got to a new engineering or our new scientific metaphor, which is superconducting networks. Right. Okay, if there's impedance going through electric power network and you're losing it. And so the solution is I need to get the superconductance. I got to cool the network down to close to near zero.
Right.
And it's expensive. And the point is, yeah, it's expensive to get to near zero. And then the impedance disappears in the network and the friction goes away. And what could you do if the friction went completely away?
Right. You're in outer space, right? The smallest amount of energy can move something billions of miles. And I love that analogy too, that you're getting to a lower energy state and that eliminates the frictions to conductance. So you achieve superconductivity. And in a way, that's what Bitcoin is, right? It's a monetary medium completely free of the noise of unexpected inflation. So you're actually conveying pure price signal. Something even gold, we didn't quite have that.
And I love your analogy because, I mean, the aerospace engineer in me is loving it a lot. You could think about when you encrypt monetary energy on the Bitcoin network, it's like achieving escape velocity out of the gravity well. What we've done, we paid a price to get out of the gravity well. Throw a baseball on a baseball field that goes a couple of 100 feet. Get out of the gravity well, throw the baseball, it'll go around the earth forever.
Yeah.
Doesn't it? Okay, so how much more distance do you get out of the baseball if you pay the price of getting out of the gravity well?
Right.
It's not like 10 times better. It's not 100 times better. It's not 1,000,000 times better. It goes to infinity and it never stops. And that's the breakthrough that people don't get. It's like, what could I do if I had vacuum and I was rid of friction? And yeah, there's a price to pay. And that's your phase change and your state change. And that's why I would say Bitcoin is the most efficient system for channeling energy through time and space in the history of mankind. We've never figured out how to channel energy with no impedance and channel energy with no loss. But let's come back to the outer space analogy. Take your flashlight and shine it in your basement. Take your flashlight, shine it, on your baseball field. Now get into outer space and take your flashlight and shine it. Or flip it the other way, the Hubble telescope, right? How much better are the photos you get from the Hubble telescope than the photos you get from a telescope that has to shoot through the atmosphere?
Right.
It's
Free of distortion.
It's 1,000,000,000 times better.
Yeah.
It's like you just can't really imagine the world when you're trapped in this energy well.
This analogy too holds for the counterparty, the institutional counterparty risk. It's almost as once you escape the gravity well, you're also free of institutional counterparty risk, right? I don't need to worry about the stability of the United States or JP Morgan to transmit Bitcoin 100 years into the future. You only need to be concerned about the stability of the energy network, which is maintained by the collective self-interest of the world, in theory.
Yeah, it's something that's just altogether unique, and we've just never had it before. If you now conceptualize that and you go through your thought experiment, you realize we need a monetary system, and our monetary system, the three in front of our face, are let's take it. Fiat as a monetary system, gold as a monetary system, Bitcoin as a monetary system. If I put my $100 million of monetary energy, I have energy. I take energy, I sell it on the grid, you give me money. I take my money, I put it into the US dollar bank, it's in fiat. I wait 100 years. And it's 7 to 8% asset inflation rate. I have a half-life of 10 years. So I get cut in half 10 times. Okay, 100 million, 50 million, 25 million, 12 million. It's going to get painful. Yeah. 6 million, 3 million. I only cut in half 5 times. 1.5 million. That's 6 times. Now it gets really painful. 70 basis points, 35 basis points, 17 basis points, 8 basis points.
8 basis points. Crazy.
By the way, 8 basis points if you don't get hyperinflation. The 8 basis points if your nation wins.
Your best case. Yeah.
Your bet, So we're not even want to say you're losing 99% of your energy is being charitable. 99% of your energy, let's say. Now let's put that, let's generate $100 million worth of electricity by burning coal or nuclear power or pedaling on my flywheel or rowing on my rowing machine, however you got to it, windmills, let's sell it to the grid, take the 100 million, and let's go to JP Morgan and let's buy $100 million worth of gold and let's have them custodian for me, put it in their vault. I guess I could just take it with me. It's 3,000 pounds, right? $2,000 an ounce or whatever the number is, you know?
Yeah.
Okay, so 1.5 tons. No, I got to put it in a vault, right? So I put it in a vault and I pay for custody fees, and, you know, going in, there's a fee, but and then I'm paying whatever, 20, 30, 40 basis points a year to keep it. And then the miners are out there doing their mining thing, and it's probably 200 basis points worth of additional gold. So that's 250 basis points a year. And if I watch it and, you know, assuming it's just a dead rock and I'm not, it's heavy, I'm not moving it, I'm doing nothing with it, I'm just staring at it, then I've got to add on the counterparty risk and then the fracking risk or the technology risk. The fracking risk is academics always opine about shortages. You know, academics have been saying there's an oil shortage, an energy shortage coming. They've been saying it since the Club of Rome in 1973 or something. They said it in the 50s and the 60s and the 70s and the 80s and the 90s. And the world always predicted that we were going to run out of oil or run out of energy in about 10 years. And I studied this at MIT. I created computer simulations about it. There's an entire school of thought, system dynamics, that studies these things. And the flaw in the reasoning is it's a linear interpretation of the world instead of a closed feedback or a nonlinear interpretation of the world. The linear interpretation of the world is we got 10 years worth of oil because that's what our named proven reserves are. The closed loop interpretation of the world is when we actually get to 5 years worth of reserves, people start looking for more reserves.
Right.
And so no company wants to carry on their balance sheet more than about 10 years worth. And then they just keep finding more, but they don't publish it because we're not factoring in human will to live, right, human ingenuity, right? People have a tendency that when you tell them they're about to run out of something, they reprioritize, they think a little bit harder, and they go come up with an innovative solution. So that's what happened with fracking. We were going to run out of oil. We had a crisis, and eventually the price of oil went high enough that people sat down and said, you know, if we invent a new chemistry and if we raise some capital, we can go ahead and implement fracking, and we double the amount of oil. And we did it fast. We had 5 million barrels a day for like 40 years, and that was conventional wisdom, and everybody thought, that's it. And then we went the next year to 6 million, the next year to 7 million, the next year to 8 million, the next year to 9 million, the next year to 10 million. And I watched it happen, and I watched, you know, all of the big investment bankers, JP Morgan and the like, they went and they raised billions of dollars from investors, and they invested in these fracking companies, and Chesapeake Energy and all these others popped up, and we were awash with oil. And the next thing you read is, so we have too much oil. Yeah. And you know why? Because it's a commodity. Because if you put $100 billion into anything, you invent something new. So for you to be this is why being a cynic and a pessimist about technology is generally a losing trade, because you're assuming that human beings won't invent anything new and have no capability to do it different.
And this has its roots in what I would say is kind of the Malthusian fallacy, right? Where he said we're going to run out of food, there's going to be mass starvation, and it just fails to take into account the non-linearities associated with innovation, right? When we get our back against the wall, so to speak, we get smarter. We figure out new ways of extracting resources or growing food. And it's impossible to, I think, project that. Right? You don't know when those breakthroughs are coming, but when they do come, it releases a lot of energy, right? It releases a lot of productivity.